Welcome back, Freedom Savers. I hope you all had a great Thanksgiving and enjoyed your families. So I'm going to go over a quick update for the Friday update today on both the portfolios. This is the Roth IRA Solid Dividends portfolio. One thing I did want to mention here is, as you can see with M1, this auto balancing works really well with automatic deposits. So if you deposit on a regular basis, this stays really well balanced and exactly at your target percentages. And as you know, all of mine are set at 1. So, but look how round that is. That's just perfect. Anyways, really quickly, they claim I've lost 114.43 overall, 129 in the market with $15 in earned income or earned dividends. I actually haven't lost 114. I've actually lost 97.03. Well, I haven't actually lost it because I haven't sold. So, but I'm down $97.03. Activity. So this week's dividends, I got paid from Clorox and Caterpillar. And that's it. That's the only dividends I got this week. But the market was only open 4 days this week because of Thanksgiving, and the market hours were shortened. So honestly, looking in at M1 itself, the only reason I'm showing you the M1 portfolio itself is just to like prove that I'm doing what I'm saying I'm doing here. So there's like no doubt. But my spreadsheet has more information and in an easier to read format than this. So we'll go to my holdings over here real fast, look at the gains, saying Target is my biggest loser at the moment. And as usual, it claims Northwest Natural is my biggest winner, which it's not. Starbucks is. Funding wise, I've deposited a total of $4,000. And the account value is $3902.97 with $17.53 in cash sitting in there. So let's get to the meat of this. I am down $97.03. I've deposited a total of $4,000. The current value is $3902.97. And as you can see, just depositing my $60 every day. That's in front of the holiday before on Monday, so it deposited twice. Dividends, I've only been paid 2 dividends this week, but I've earned more dividends. I've actually earned $15 even in dividends in this portfolio so far. I've currently been paid $6.08 of that. My buy activity, as you can see, I'm buying every single day the market is open. I buy over 90 companies a day. Most of the time it's around 96. Now, one thing I wanted to talk about was the increases in dividends. So this is why I own a lot of these companies, because they continuously increase their dividend year over year. So last week we had these guys raise their dividend, the one with the single stars here, and I've just reset them to be equal, so that's why the value shows 0. This week, though, Hormel raised theirs by 12%. They raised their dividend by 12%. Main Street Capital, oh my God, they raised their dividend by 41%. That's amazing. They went from 234 a year to 330 a year. And Cisco Foods raised theirs by 8.33%. So, I mean, that's amazing. This is why I own these companies. They continuously raise their dividends year over year. Not all of them, but the majority of them. And that will increase my yield on cost over time. Now to the fun tab, my main tab is my yearly dividends. So there's been a total of 4 investing days since the last update. I've deposited a total of $240. I've increased my yearly income by $8.55, which gives me a yield on cost of 3.56% for this week. Overall, I'm making $127.86 a year in dividends, which comes to $10.66 a month, for an overall return of 3.2% on this portfolio. So yeah, that's the update this week, guys. Not too exciting, pretty straightforward. I mean, if you want to see anything in particular that I'm not showing you, let me know. I'm completely transparent on this. 100%. If I'm gaining, I let you know. If I'm losing, I'll let you know. And as you know, the markets have been down, and they continue to go down slowly. The market is correcting. Everybody's freaking out. The news is, oh no, it's all crashing. Pull your money. Do this. Guys, if you own good, solid companies, just hold them. And when the price drops, buy more. Buy at the lower price when they're on sale. because you know that they're solid companies that you want to own over time. Just because the price in the market changes doesn't change the fact that these companies are good companies. There's a lot of news going on every day with, oh no, such and such company is getting sued, or such and such. Ignore the noise, guys. Ignore the noise. If it's something big, yeah, if a company's going bankrupt, that's something to be concerned about. But for the most part, you should be able to set up your portfolio like I have here in an IRA and set up automatic deposits and pretty much never look at the news for stocks. Just ignore it for a year or two. Yeah, something may happen, something big may happen, one of the companies may go bankrupt, but it's so unlikely. And honestly, keeping up with the news day to day to day to day can, if you're emotional at all about these stocks, then that can really affect your decision making on your portfolio, who you invest in, who you don't invest in, all that good stuff. And if you're chasing that profit, that short-term profit based on short-term news, in the end, it's not going to work out for you like 90% of the time. So yes, I get the news automatically in my mail for all my stocks every single day the market's open. All day long, I get spammed with news, and I will glance at the subjects of the news, the titles of the news, and I'll delete 50% of them without ever opening them. Probably more. I probably delete 70% without ever opening them. I saw the title, I'm like, okay, that's interesting. Delete. Next, and I'll do that all the way through all the spam of news emails I get, because I know it's short-term stuff, and in the short term, none of that matters. What's the old saying? In the short term, the market is a voting machine. In the long term, it's a weighing machine. Meaning, in the short term, it's all about opinions and people thinking, okay, this company's not worth this much anymore because of what's in the news or whatever. Whereas in the long term, the value of a company is going to reflect in its price. So anyway, don't freak out over the stocks dropping, guys. This is short-term volatility. The market's correcting. We've been in a 10-year bull run. Of course, it's going to go down at some point. Let it go down. Keep dollar averaging in. Take advantage of the prices dropping and buying more into your portfolio. The great thing about dollar cost averaging, if you're buying the same amount of stocks, say like I am, $60 every single day, or $240 a week, or $200 a month, whatever it is. If you just consistently buy stocks at that regular interval for the same amount, your dollar cost averaging in, and what's going to happen is when the prices of those stocks go up and they cost you more, you're going to end up buying less stocks when the price is high. And as the price drops, you're depositing the same amount of money, you're going to end up buying more shares when the price is low. So it's automatically working to your advantage, because you want to buy less shares when it's high and you want to buy more shares when it's low. So long story short, I'm not making a video about, oh my God, the stock market's crashing. Now, if it drops 20+% in one day, great. I'll probably make a video, guys. But I'm still not going to tell you to freak out and sell your shares. But I'll definitely talk about it. So anyways, don't freak out. Stay smart. Keep investing and growing those dividends, guys. Catch you later. Alright guys, thanks for watching. I appreciate it. Be sure to hit that subscribe button down below, and if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks guys.